All right, everything looking good on my end. Should be live. Let's go ahead and get this party started. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8 p.m. Eastern Standard Time on March 19th, 2023. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly, or you end up living in a van down by the river. All right, I think we got the bases covered. Let's go ahead and jump right in and have a little fun. So we see the banking situation continuing as we see now Credit Suisse officially been acquired. What's going on, Durwood? Good to see you. So, just continuation, nothing different here. I had some friends and family members asking about, my opinion on the whole banking crisis and all that. And honestly, I think the truth is right now, there's two narratives. And the two main narratives are that the Fed is going to tighten until they break something. And we just broke something. So now the Fed is going to pivot. And, you can argue, obviously we talked about the balance sheet on the last little episode here. So we basically went through and showed the Fed balance sheet, and that it had gone up by essentially 1/3 of the total tightening so far. So about $300 billion went back on the Fed's balance sheet, and a little less than a little less than a trillion, about 900 billion had come off. So that being said, we're basically in like a downtrend, and then we bounce back a third of that trend. And I do expect us to continue down. Are we going to put more on the balance sheet? Is there a potential maximum of $2 trillion of quantitative easing or Fed balance sheet? Sure, there is. Yes, Goldman Sachs is correct. There's a potential of $2 trillion in upside down assets that could go on the Fed's balance sheet. But the truth is, part of what the Fed did was opened up their balance sheet so that everybody wouldn't need to use it. So in my opinion, we got another special purpose vehicle for the Fed. The reason that they bailed out, arguably, whatever you want to call it, the banks or whatever, the reason they've made the decisions they've made is so that they can continue the tightening cycle. Things are going to break. I don't think that you could argue, oh, well, this is systemically important, blah, blah, blah. But is it though? Because wasn't it really just duration mismatch and lack of hedges on long-term bond portfolios? So, if that's it, everything's fine. It's not like a bunch of people are defaulting on their loans. This is like safe collateral that they were holding. And then it turns out that, they made a bad decision, didn't listen to the Fed. The Fed said they were going to, leave rates lower for longer. And the next thing you know, it's the fastest tightening cycle ever. So the truth is, all the Fed did was just sort of fix the issue. I mean, we all know that the Fed had a massive mistake. They were way too loose. There was way too much fiscal and monetary policy. This was worldwide, not just in the United States. So now, you know what? They're using the tools at their disposal to basically like keep everything working correctly. And I think that's what they should do. Obviously I'm anti-bailouts. Doesn't take long to figure out that, I'm all about small government, less intervention, less control, but obviously I don't buy into all this BS. So that being said, as far as I'm concerned right now, that's scenario one, and the tightening continues, 25 basis points, everything's fine. I don't think this is like an official pivot yet. You could say, sure, well, the Fed's balance sheet was going down and then it went back up. But obviously, we know things go up and they go down. What we're looking for is higher highs or lower lows to determine the trend. And right now, the trend on the Fed's balance sheet is massively up and then down. And now it just had a little bounce back up. So as long as we put in a lower high, as long as the Fed's balance sheet doesn't go over that 9-10 trillion mark, then, as far as I'm concerned, it's a lower high and it's just part of the retracement. So we see TNX, obviously and then obviously the other situation is that the Fed didn't pivot. We're going to continue tightening on is the primary situation. The other situation is the Fed actually did pivot. They put back on the balance sheet. Soon they're going to be cutting rates and, it's QE infinity all over again. Maybe that's going to happen. I think that part of why the Fed took these actions, why the Treasury, took these extraordinary measures is so that they can continue the tightening. And it was funny too, because I saw headlines and they were talking about the ECB hiking 50 basis points. And then in the same headline, it was like ECB hikes 50 basis points with dovish tone. And I'm like, wait a minute, how can you hike 50 basis points and it's a dovish 50 basis point hike? No, you could have a dovish 25 hike. You could have a dovish no hike. You could have a dovish cut. but you can't have a dovish 50-point hike. I mean, that's insane. So we'll see. We'll see. So TNX at support right now, retesting for the third time here. So we now have a high. We have that low. We have a lower high. We have that same low again, arguably slightly lower low. Then we take out that previous high, but we have a lower high right here technically. So what we're paying attention to is a lower low. Because if we put in a lower low here, we have a high, we have a low, we have a lower high, we have a lower low, and we'll lose the 200s. And it's going to look like we're going down. In my opinion, though, we spent a lot of energy on that move down. The knife is at the bottom of the range. The stochastics have went from all the way in the bullish control zone all the way down to the bearish control zone. We used a lot of energy and basically just came back down to retest support again. So I wouldn't get overly bullish on bonds going forward. And if I'm right about what's going to happen in the future, which I'm sure I'm not, I'm sure I'll be completely wrong. But, you know, the truth is, don't even look at the rates on things. Look at real rates. So everybody that's getting like super bullish on bonds and everything, understand that if the government is paying you to fund them, that they're going to inflate the money supply faster than that. So you're still going to end up with negative real rates, in my opinion. Maybe I'll be completely wrong. But the fact that, you know, you can get 5% interest rates on some of these bonds right now, like short to medium term, it tells me that the government is planning on more inflation going forward. You know, maybe the yield curve inversion is not necessarily representing that at this time, but we'll see. We'll see. I wouldn't get overly bullish on bonds. I'm just saying right now, I don't think is the time. So next we have U.S. oil. So looking at the U.S. oil chart, so we see that monthly move happen. So this is what we've been talking about forever, obviously since the beginning of time. We called the top on oil perfectly, called the bottom way back here too, when Queen Kathy said it was going to zero. And then right after it went to zero, she called for it to go back to zero. Yeah, okay. So it went bullish, you know, new lower high from the previous all-time high. And now here we are. We've confirmed the 821 bear cross on the monthly. We're retesting the 200 exponential. As long as we're above the 200 exponential and simple, one, the other, both, whatever, it doesn't look terrible to me because that's what you would expect to act as either resistance or support. So I do think this will act as support. Obviously, we have some bearish momentum in play here, but this was the move we were expecting to happen. We got it. We were up here at, you know, 130 plus oil per barrel, and now here we are in the low 60s. And we're at the 200 exponential moving average. So regardless of if this is the macro bottom, I think we're going to bounce from around this level. So I would not get overly bearish on oil right now. And we're actually going to transition over to energy as well. So we're going to look at XLE first. I want to focus a little bit on these energy stocks because basically, you know, obviously we got lucky. Everything we said has happened almost perfectly within a couple dollars. So we had a beautiful run up. And then everybody bought the top on energy. We dumped on their faces. And now we're coming back down retracing, but we're bullish long-term on energy. So we need to know, okay, sure, it's great to buy the bottom. It's great to sell the top. But if we're still bullish on this, we need to find a new entry, a re-entry into this position. So that's what I'm keeping my eyes out for here. So when we look at XLE, we're breaking down below the 200 exponential and simple. We had a couple other tests of it. And this is probably, I mean, this is the most aggressive or the worst one so far. We're losing the 200 exponential and simple. It is turning down. At some point in time, we'll play that reversion of the mean play back to retest the 200 exponential and simple. But if they do act as resistance, we'll expect a deeper retracement. So if we just slap on a ton of drawing tools, if we just put all the drawing tools on our chart, this is what we get. So from the bottom down here, you know, essentially I kind of map this out as a 1, a 2, a 3, a 4. 4 does not retrace deeper into the 1, and then 5, and then that was basically our top. We came up here, did like a little double top thing. Maybe this is the real top because it went a, you know, $1 or $2 higher. Maybe this is the top. Maybe this is doing a Bitcoin right now where it topped out. It comes down, has a deep retrace to the 200s, comes back up here, puts in a slightly higher high, and then we roll over. Obviously, we know what that is. This would be an atom, a spiky top, and this would be an eve, a roundy top. Okay, I prefer round bottoms, but, you know, round tops are okay too. So that's basically your double top, textbook as it gets. So at the basically support point of that double top, if this is our atom and that's our eve, that is a 236 of the move from the lows up to the highs right here. So that 236 would be the neckline. So if and when we get down to that level at about 67, 76, I would expect it to act as support temporarily, and then we'll push up potentially put in a lower high, and then potentially get the breakdown down to the 382, potentially even as low as the 0.5, depending on, maybe we do go into a recession. Maybe it is a depression. How low is energy going to go? Because we know this represents economic activity. The same way food represents, human activity and productivity, this is our energy is representing like the actual economies. So that being said, it looks like our target for right now is going to be that 67 level, and then we'll potentially look for a scalp off that level for the back test of the 200 exponential and simple, which theoretically we would expect to act as resistance when we do come back and touch them. We don't want to get overly greedy on this because there's not going to be like a huge margin on this trade. But I'm looking for something around like a 15 to 20% back test. So let's just say hypothetically we're right and the chart acts like our little bitch and it does exactly what we expect. And we get an entry off the 236. We're basically saying, okay, if we drop back down too deep on this retracement, we want to get out. And then, we're looking for basically a back test of the 200s. Depending on how long we get there is where they're at. But we're talking about something around like a 15 to 20% upside potential off of what amounts to a neckline, a key fib support, etc. And that would basically put us at 20% upside roughly with 5.5 downside, about a 3.63 to 1. Because we technically be counter trend trading, it is still technically a bull trend. We're losing that trend, so we're trading the back test. So this is basically our last bullish retest before we confirm essentially like the bear market. So this is the last bullish trade I like to make unless we reclaim the 200s and start back into a bull trend. Now, you guys know, obviously, too, I'm very, very bullish on energy long term. So if we do take like the deep zoom out look right here, we're basically looking at something like this, where this 5 waves is actually the macro 1. The 2 comes down, retests either the 200 simple, that's our green box 236 area, or the 200 exponential, was around our which is around our 382 and 200 exponential area down here, somewhere around that for our actual 2. And then, meant to do something like this, somewhere around like this for our 2, depending on how deep it goes. Could be a shallow retrace, could be a deep retrace. But regardless, after that, I do expect us to go further, and start hitting like the 1.618 fib extensions, taking out that previous all-time high. It is worth paying attention to the fact that we have our 2014 high, that's oil, XLE, all of the like various energy stocks we're going to look at. Most of them did not put in a new high since that 2014 level. So that being said, when we do take out this high, that will be the equivalent of a blue sky breakout. And we'll be looking for like initially 1.236 at 143, which is from where we're at right now, it's a 100% increase to potentially as high as a 1.618 at 256, which gives us something closer to like, 350%. So, of course, does it have to happen? Oh, I thought you said we were bearish. Well, I mean, we're looking for the entry to be super bullish again. That's the beauty, though, of just trusting the charts and seeing what's happening and just following the breadcrumbs of the market makers. We just get to do what the charts are saying. We don't have to worry about like our opinion or our feelings or our thoughts. We can just be fucking straight up mechanics. So XLE, yeah, okay. So we're going to look at a couple of the big names in XLE, and then we'll look at crypto. I'm sure everybody's excited for that. We don't have to worry about that right now, though. Normally, we're looking for like good opportunities for upside potential. We just nailed it again. I mean, this is like the most insane start to a year we've ever had, just crushing one after another after another. Congratulations to everybody that's getting a piece of these recent rallies. That being said, though, we're bullish on energy, so we want to start looking for the next trade. We don't know if it's going to be a couple weeks, a couple months, whatever, for the next big, bull market, the next big trade. Obviously, we have some crypto stuff on right now. We have some tech stuff on, but let's see what this energy is all about. So ExxonMobil, obviously, we've heard of them. It's like kind of a big deal. Holding support at the 200s for now. I'm still looking for a deeper retrace on this one. But essentially, as long as we're holding the 200s or what amounts to like this ascending support line, it looks okay. So we're basically at the lower end of that range. So either we're going to buy the dip right here and it's going to shoot up to new highs, or we're going to break down from this level and we'll start looking into 236 or 382 for a retrace, which we're talking about somewhere in between like, 11% to like 25%. So CVX is next, and Chevron, same type of deal. We're holding the 200 for now. We don't have that same kind of like clear cut hold of the 200s and that ascending support. We're basically breaking down from it, telling me, just like we saw with the index, that if we break down to like the 236 or something like that, break down far enough, we're expecting a bounce back, a reversion of the mean on the 200 exponential and simple. But it does look like we're confirming into a bear market. So the bulls will have opportunity to rally back up, retest, reversion of the mean trade. And then after that, they'll have an opportunity to turn this back bullish and keep going, or else the bears will take over. A lot of the bulls will become bears. A lot of the bears will become extra beary. So Marathon is next. Obviously, lots of big names, big market caps. We're not looking at, trash BS stocks over here. These are like the real deal, okay? These are not penny stocks. So MPC, again, similar situation, a little more bullish, not even at the 200 exponential or simple for now. Touching tips on the double top right here. Looks okay again. Looks like it wants to come down, but definitely seeing some more strength in Marathon than we're seeing in some of these other big producers. So Schlumberger is next. SLB, again, same type of thing. Retesting the 200s. We have a pretty clear cut, ascending support through this. You could argue and draw it a couple different ways and say, oh, it's already kind of breaking down. It's not quite breaking down. The rough idea is all we're really looking for on these. So it does look like we're headed down here to that 236 to retest the big move. And then after that, we'll look for the bounce back up. And then again, the move down to roughly the 382. If the 236 starts holding, these stocks start looking good, the economy keeps booming, everything's just going to run up forever, that's it. We could just get a shallow retrace and that's fine. 382 is the ideal entry. 0.5 is, obviously Daddy Dow. And then, if it comes down crazy deep, which I'm not expecting right now, maybe the 618. Not my base case scenario by any means. So we get into a couple more big ones and then just kind of trail off here on a couple more. Matter of fact, I think we get the point here realistically. COP, ConocoPhillips, same thing, losing the 200s, back testing the 236. We would expect, something along the lines of that push back up, reversion of the mean, rejection, and then, probably going lower. So that's what we're looking for right now. Does it have to happen? No. But I'm definitely still watching these energy stocks and looking for that next big potential move while TradingView messes with me in real time. So yeah, we don't need to look at all of these. I just basically pulled up the top 10 names in the XLE. All right, so let's look at TLT now. So obviously we had a decent little move on bonds. We're basically trading inside of this range. So the support at 99, resistance at 109, and it's clustered up with a 200 exponential and simple. So as long as we're between, essentially the channel yellow bottom right here and channel yellow top right here, which also amounts to the blue 618, I think we just keep bouncing in this area. If we do break out from here, that's going to mean that yields are likely breaking down. That's going to mean that, maybe the Fed is pivoting or something like that officially, or maybe there's some kind of cuts, or maybe something else broke. I'm still not convinced. Historically speaking, when we look at the times when rates were like higher and people were locking in for bonds, we also like historically had like pretty high inflation too, and most of the time it was negative real rates. So it doesn't have to be the case this time, but I would be very, very careful. There is a reason that someone pays you 7% for your money. There's a reason that the government pays you 4% for your money or whatever. It's because they want it and there's less of it around. And we know that the government funds things by, basically, deficits, obviously, because we always run a deficit, and then inflation. So if they can't keep funding it with deficits, which they're going to keep doing anyway, we're constantly running deficits. We're constantly building up higher and higher actual like total debt level, debt to GDP ratio, all that stuff. So we know that that's not going to change anytime soon. It's only been going up. So in my opinion, more likely than not, if we're going to go into like the higher for longer stage or whatever, it's probably going to be higher rates for longer. But what they don't talk about is it's probably going to be higher inflation for longer. So I know there's like this whole big narrative, the long-term deflation and the tech narrative and all that stuff. And you know what? I mean, I'm not saying that that's wrong. I'm not saying that AI isn't going to take people's jobs. I'm not saying that robots aren't going to make French fries and drive around and clean floors and check you out at the supermarket. I'm not saying that any of that, robot trucks, taxi cabs. I get it. I get the narrative on it. I totally understand. I understand the whole thing. But the timing, in my opinion, is completely wrong. I don't think we're nearly as close to these things as people act like they are. So, and maybe I'll be completely wrong and there'll be robot trucks, driving payloads around the country or the world, next year. and I'll just look like a complete idiot when AI taxi cabs pick everybody up and deliver pizza via drone and all. Sure, I'll completely, trust me, I will 100% shift my view and I will admit that I was wrong. But in the meantime, come on, the timing on this stuff is way off. So Dow Jones is next. So we did have a nasty close on the Dow Jones, close out the week. Matter of fact, no one's talking about it, but actually everything but the NASDAQ looked like total trash. So the actual Dow Jones, very weak, closing at basically the lows, losing the 200 exponential and simple. This is our double top breakdown. This is essentially the neckline, the line in the sand. What we have to look out for now, okay, is the flush down. So the measure move, basically from the actual like top of the range and the neckline. And that's essentially the majority of what we've gotten so far. But we're looking to potentially lose that next level of support, come down here, lock in that potential right shoulder. And then actually, I'm going to look at that as a higher low buying area. And I'm going to take a stab at it. So we have the trade set up in play here, 15% upside, 6.5% downside. It's not great, 2.5 to 1 risk reward ratio. But we are kind of just deciding whether or not we're bullish or bearish right now. So I'm going to give a shot for the higher low support when we get down to this range. Obviously, we'll play it off of price action like in real time. But, the truth is, I'm really only looking to enter this trade so that I can already be positioned for this trade. Because this is what I'm basically betting on. I'm not betting on, hey, we're going to run back up here, hit the neckline again, get rejected, and then go lower. The risk reward ratio, there's way better stuff we could trade. But if we end up getting an entry here off the 236 and then that ends up leading to new all-time highs, I mean, with the exception of this low right here, we bought the lowest low, the second lowest low, the higher low, but a nice low, a good entry nonetheless. So we'll see what happens. Probably the Dow Jones just surges to $1 gazillion or goes straight to zero and we'll miss our chance. So don't get your hopes up. SPY, SPY again. Weak, below the 200s now, below the 8, below 21. Did a lot of dirty stuff here. When we look at that weekly, we broke down, we lost this 821. It was about to bear cross. We back tested it. We got rejected. So sure, it's a green candle. Okay, cool. It's green. But the 821 bear cross confirmed. We lost that ascending support line we have right here. And more likely than not, in my opinion, we technically put in a lower, no, I'm sorry, because we gapped down and moved up. So we technically didn't, we gapped down, opened up from that level. So I guess technically we put in a lower low. Who cares? So it's close enough realistically. What we're looking for is do the 200 exponential and simple hold at 372. Does this momentum continue to the upside, or is this going to be a legit hard sell signal? The truth is right now, the way these markets look, they want to retest the lows. Do we get all the way there? Do we blast straight through them and go straight to zero? We don't know. That's why we call it testing the lows. We have to go there and then we have to run an experiment to see what happens. And the experiment is, do people buy when we get there or do they sell when we get there? Do we go up from there? Do we continue down from there? So, that's why we call it testing, because we don't know what's going to happen. So we're going to run a test and we're going to see what's going to happen. And that's what's happening in the markets right now. And you get it because you guys are adults. So triple Q is next. So again, broke above the 200 exponential and simple here. Look at the difference on the daily close that we saw in tech right here. So part of this is the easy money pivot tech. So right now there's a bunch of narratives going on, okay? And if you listen to the right person with the right narrative, it's pretty fucking convincing, okay? And we could sit here and we could talk about like the top 10 narratives and we could tell a nice story. And, we could have some story time. We could talk about the lore of the charts and, what it's going to look like if we go into a recession, or what it's going to look like if we go into depression. What if the Fed already pivoted? What if it's the beginning of the pivot? Do we go lower? We could do all that. We can go through all these narratives. We can talk about deflation, inflation, all this fun stuff. Who cares? Let's just look at the chart. What this chart is telling me right now is that, people are ready to go risk on in tech again because they think that the pivot happened. They think that the money printing happened. Obviously, the safety version of that trade is Bitcoin, crypto, and gold. But this is sort of like the speculative version of that same trade, in my opinion. So looks much, much better than the other indices. When we look at the weekly, we bounced the 200 exponential and simple. We held support. We bullish engulfed. Doesn't look bad. Momentum in its favor. Tech actually looks pretty good right here. It looks like essentially we double bottom and we're trying to just grind up here and retest that next 330 level. When we look at the monthly, this looked really, really bad. Rejection, went lower, came up here, got a pretty clear rejection again. And then from there, it's trying to actually rally back above and reclaim So this looked really bad for a long time, much worse than the other indices on the monthly, but now it's looking like it's trying to carve out a bottom. And the way this looks, if it continues to the upside, it's going to look like tech just bottomed before the other stuff did, or at least moved off those bottoms more rapidly, which makes sense since there was like so much more drawdown already priced in. So back to the Russell now. So the Russell was the big narrative, the Dow Jones was the big narrative, and both those narratives imploded, and then the tech became the big narrative. So one of two things getting ready to happen, okay? Either this is going to be like one of the biggest false start rallies ever, and tech stocks and crypto are going to completely melt down, or, I mean, get ready. Get ready. Because if you thought the last crypto bubble was lots of money and crazy cults and insane behavior and, you know, just ridiculous things coming out of people's mouths, get ready, because this one's going to be 10 times as much. If that was the shakeout and crypto's getting ready to rally again and tech's getting ready to rally again and we're going to go back into easy money, get ready. I mean, put on your seatbelt, and you might want to wear a helmet because it's going to get insane. I mean, we're going to outer space if that happens. So Russell obviously losing key support. It's holding on to this for now. The 200s look terrible now. This looks like a very clear bear market attempt to reclaim that bull market, you know, and start moving back to the upside. Failure, rejection, and now there's only one low left. This is it. If we lose this area, there's only one low left, and it's 1651. And then after that, it just gapped down to zero. So I think 1651 will hold for now, but I wouldn't rule out the Zizzle. So XLF Financial, still trash. We don't really need to look at these banks, but we will anyway. So we're holding that green support line for now, that $30.80 level. But we're very, very close to the lows, which was that 382 retest. It does look like these things are setting up for some kind of like dead cat bounce. Does it underperform? Does it overperform because there's a short squeeze? I honestly don't know, but there's probably some kind of opportunity in here. But I'm just not sure this is the falling knife that you want to die on, or whatever the expression is. I would be very, very careful with this stuff. And then we'll just look at a couple of these trash famous banks right here. FRC, First Republic Bank. So it did have a pretty aggressive bounce, gap back down, and then melted down. It's basically back at the lows again. It still looks terrible to me. I mean, it's trying to have some kind of bounce off the bottom, but I would just be very, very careful with this. If you were trying to get into these things and play the move back to the upside on some of this stuff, I would just wait until there's some kind of positive momentum on like shorter time frames. I don't think that catching a knife on these things is a good idea. Silvergate, again, complete trash, massive gap down, complete meltdown, and this thing is just consistently closing at lower lows. We're not even seeing like a real attempt to bounce. So it looks like it wants to go lower. There is some bullish divergence. There is an argument to be made for exhaustion at these levels. There is, you know, I mean, let's be real. If this thing decides it's going to bounce or something like that, I mean, we could easily see 30, 50, even 150, even something insane like a 550% move to the upside. But fully understand that any money that you put into Silvergate is going to zero, but maybe you have a chance to grab some gains before then. But if you get greedy, it's going to zero. Unless it doesn't. And then maybe it's just at new all-time highs soon. Who knows? Not me. Credit Suisse. So obviously, we'll see what happens with this one. I mean, same thing. Complete meltdown. Had a nice little bounce. Given most of it back. But obviously now we see some more fundamental news. You know, it's a tough one. We lost some key areas that we traded inside for like literally decades. This thing has been trashed for a long time. And as crazy as it sounds, you know, I have zero interest in this at all. But even if you were just like completely obsessed with this and you're just, this is the best opportunity of a lifetime, you don't know what you're missing, there's no way I would touch this thing until it's at least back above the 200s, if not back inside of this long-term channel. So for me, this is just a no. Good stocks don't trade at $2. The end. The end. All right, so yeah, we'll look at these real quick. So DXY, this is a little bit of an interesting move. I would expect some weakness in DXY because, you know, every time we see ECB hike prior to the Fed rate hikes, we're going to obviously see the market has to reprice the difference. So if we're at whatever levels, and let's say the difference between them is 0.5 at any given time, 50 basis points, if suddenly the ECB hikes, or not suddenly, if the ECB hikes 50 basis points, close that gap, now they're even again, the market has to reprice the dollar relative to the euro. And then once the Fed hikes 25 again, then the market reprices again that the gap has went from 50 down to 0, back to 25. These are made up numbers. I'm just using them as an example, but you guys get the point. So that being said, we would expect some weakness in this until the FOMC meeting. And then if, the Fed hikes 25, we would expect some kind of strength back in it. If the Fed hikes 0, we would expect weakness in it. And if this Fed hikes 50 basis points, which I don't expect, we would expect, strength up here. So I do still expect the 200 simple as our target. The key is to watch where is that higher low. If we do continue down here, do we get a higher low, or does it retest this area, end up breaking down? We're starting to give back some of this. But look, we came all the way from the hard sell signal in the bullish control zone, all the way down to almost in the bearish control zone. This is where we were at the time, and this is where we're at now. So all that weakness, all that momentum, all that pullback, and it didn't really go anywhere. Now, that being said, the 821 did bear cross here. So let's not assume that this is going to continue going to the upside. Let's also not assume it's going to continue to the downside, but we're very, very close on a lot of things of deciding, bullish or bearish. Very, very close. And once we do, it seems like it's all crazy at the time, and there's going to be big moves, and things are going to be popping off, and there's going to be some false signals, and things are going to feel like they got away from you, and things that are selling off, you're sure shouldn't be selling off. But after that, at some point in time in the near future, we're probably going to end up in a very strong trend, either bullish or bearish, and that's going to be the real trade. So that's all we're really looking out for right now. Like, we're casually just like milking the market whenever we're thirsty. We're suckling on the teat of them dollar bills, yo. But the truth is, we're really waiting for the next big trend to emerge. And we're not quite seeing it yet. We're seeing a couple things trying to trend. Gold trying to trend. That's that fear trade. Bitcoin. Most of alts still look very weak. We see the major indices kind of looking like they're going to give up the trend, but the Qs are looking like they actually are going to stay bullish. So we're very, very close to deciding some important things. Tesla looks like a pretty clear rejection. Came down. Looks like it wants to test back up here again. Wouldn't bet against Tesla right this second. Really just tech in general. Microsoft, these big names, they sold off a lot. This thing has been very strong. Obviously got that pushback up to 236. Bunch of bullish news and everything. As long as we're putting in consistent higher lows and higher highs, I expect this to full on move to the upside. But again, what I'm looking at when I see this is a lot of other people are looking at it as, the breakout, and we're getting ready to move to the upside, and this is it. This is the new bull market, whatever narrative you want to use. What I'm looking at is, we have a clear downtrend, descending channel or something close to it. It doesn't have to be perfect. I'm just going to clean this up a little bit. So we have something along these lines, a clear downtrend, descending channel, whatever. And then we're bouncing that and moving to the upside. Sure, we broke out, but what are we really doing? Are we just internal retracing the down move, and we're going to give back 50% of it before we go down again? That's typically what happens in this pattern. It's a bearish pattern. We have a bullish breakout, an internal retrace from high to low, typically like 50 to 62%, 61.8%. And then after that, resumption of the downtrend. So we hit the 50 right here. We moved up above it. Ignore the green fibs for now. And then the next target to the upside would be the 618, which would be 290. At which point in time, 61.8% of the move to the upside likely to resume the downtrend, or it's a breakout, bull trend, whatever. So, realistically, it's the same thing over and over again. We're close to confirming new trend, but it could still go either way. Apple strong, retesting those highs. Looks like it wants to push up here to like 162. Google, we put the G in magma. Broke out above the 382, retesting the 200s. We know there's that potential to get up here to that next target, somewhere around like that 28 to 30% move, somewhere around like 111 to 118, something like that, if we can get above these 200s. Google has been weak, but it's got higher lows consistently. So break up here and taking out this high, pretty much got to assume 117. So Meta, been very, very strong. Still has that gap it did not fill. Still above the 200 exponential and simple. Both are blue. We're pushing up here at resistance of the slope line. Potential here to smash some bearish divergence and then a big breakdown. That's what I'm expecting. And when I'd say big breakdown, just back to 151? I mean, it's not that big of a breakdown, Like, sure, you know, if you get kicked in the face with 22% downside and you bought somewhere up here, it's terrible. But, you know, if you're just giving back a little bit of this moves to the upside before we find support and continue higher, looks good, constructive. Looks constructive. That's what I want to see. Amazon, decent little move off that 886. Perfect entry for anybody that took that trade. We are headed back up here to this 102, potentially 108. If we can break through that, we got the 618, the 0.5, all the same stuff we just said, just different ticker. And then NVIDIA, obviously just still raging to the upside. Same exact thing though. Descending channel, breakout, you know, move to the upside. This one is already back up at like the 786. So, you know, you guys know that's my last line in the sand. There is an 886, but I've never seen in all my life it do anything ever. I don't even know why anyone would ever put it on their chart, because the 886 is weak. It serves no actual purpose. It's sort of just like something to laugh at because it doesn't do anything. So that's right, 886. You're my bitch. And you guys know I was ready to give 886 the respect it deserved. But nope, it's nothing. It's a nada. So yeah, same thing. I mean, this thing looks like it wants to go higher though. This thing looks like it wants to go to new all-time highs. And you know what? If big tech breaks out and, you know, semiconductors, NVIDIA in particular, you know, whatever the new narrative is, whether it's weapons, whether it's video games, whether it's crypto mining, whether it's AI, whether it's, you know, the metaverse, I don't care what it is. There's going to be a narrative for it. And, you know, NVIDIA has been the king of narratives. Tesla, not bad too. So, yeah. All right, let's look at these cryptos now. Time to dig in the dirt. All right, so Bitcoin on the daily. So we blasted up through that previous high, saw that continuation to the 382. That was our next sort of like key support level. Next thing we're paying attention to, we touched a 1.5 from that high right here to the low right there, the retest of 200s. That gave us exactly the move that we had. If we continue to the upside, 1.618 seems likely, 29,600, call it 30K. After that, it's a 0.5 at 32,000. And then it's just reverse slinky theory. We just start grinding our way up here. We're above the 200 exponential and simple. They're both angled to the upside. Looks good right now. Could it fail? Could it roll over? Could it go to a new low? Sure. But right now, Bitcoin is strong. Way, way stronger than alts. So we're about to look at the Bitcoin dominance chart, and altcoins are trash. They're garbage. They suck. They're all at zero right now already. So if you had money in altcoins, it's gone. Should have bought Big Daddy Bitcoin. At least that's what the maxis say. I'm not convinced. Bitcoin futures chart. So we got another gap up here on the futures chart because we ran over the weekend. Is it, you know, bullish excitement? Is it fear? Is, you know, yes, it's both. 100% both. So we did come up here and saw that strong push to the upside and invalidated the potential bearish divergence between these 2 points. As we now have a higher high, we also have a higher high on the indicator oscillator. We are at extremely elevated levels. Does seem likely we're going to come back down here and fill the gap. Let's be real. 27K. Realistically, though, what we're really looking for is some kind of retest of like 25K, potentially even a deep retrace of like 24K, 23.7. But we're looking to buy any retest of key moving averages at this point in time. We were bearish here. We were sell the rip the whole time. And now, you know what? It's buy the dip until it's not. And right now, it is buy the dip. But don't get too bullish because obviously Bitcoin's trash and it's going to zero. And Satoshi's getting ready to dump on your face. The ETH chart looks exactly the same as the Bitcoin chart, with the exception of it still hasn't taken out that initial run up right here. Bitcoin has a lower high here, and then this was the higher high. ETH had that initial pretty big move up here with the ETH 2.0, you know, buy the rumor, sell the news. And then obviously we dumped on everyone's face as always. 2000 seems like the likely target for ETH on continuation. Again, above the 200s, very bullish relative to most cryptos. All right, so we did see the big break that we were expecting. And of course, as always, it did exactly what we said, like to the penny, which is just laughable, especially when we're talking about in trillions of dollars. So total market cap on the weekly literally pushed up exactly to where we said, I mean, to the penny, and we're talking about in trillions of dollars. So that's the 1.141 trillion. We touched it. We closed at it at resistance. Literally the most textbook thing you could ever do in all of existence. So once again, the charts are easy. Probably short-term top right here as it comes back down to retest. The moving averages, we give up like about, you know, $140 billion in market cap on the retest. So we'll see. Maybe that corresponds with altcoins rallying. Maybe it corresponds with just Bitcoin giving a little back. Let's find out. So obviously the Bitcoin dominance chart has been by far the most useful chart ever in all of existence, with the exception of the DXY. If you literally just look at the DXY and the Bitcoin dominance chart, like everything is just so much easier. So if you have access to them, they're obviously very, very expensive. Elite access. It's similar to like the weekly and monthly timeframes. You have to basically get like, personally invited by TradingView to join the club to have access to those things. Most people just get like the 1 minute, the 10 minute, stuff like that. Maybe an hour if you're lucky. If you're like a long-term investor, you might have access to like a 4 hour. But most people will never ever be able to even use a daily chart. So that gives us huge advantage when we look at these longer time frames and we look at the overall trend and see what it says. So on the Bitcoin dominance chart on the weekly, we know, this first off, it did exactly what we said once again. So we have this support here in green. We have our resistance here in orange. We got a giant parabolic candle to the upside, as expected, as predicted, as discussed over and over again. So exactly what we said happened. We even talked about the exact situation where Bitcoin is pumping to the upside like a straight up rocket ship, and the altcoins are just lacklusterly kind of following along. Oh, I wish we could be strong like Bitcoin, but no one's scared and wants us. So that's how we know this is 100% fear. People buy Bitcoin out of fear, whether it's fear of inflation, whether it's fear of banks, whether it's fear of, the government coming and taking your stuff, whatever the fear is, central bank digital currency, whatever the fear is, this is a fear trade. So these people are scared. They're afraid. People buying Bitcoin right now are afraid. And that's okay. That's okay. It might spark the next bull run. Inflation fears sparked the last bull run. Actual fears of death, the end of the world, sparked the last bull run. So why can't it be the same thing again? People are afraid. Just in general, people are scared of everything. Just raise your voice quickly around somebody. They'll be scared. Oh my God, what was that? People are on edge right now. They're afraid of everything. So this Bitcoin dominance trade right here, that's the fear trade. Nobody wants, actually it's a combination of two things. It's the risk on trade because we see all the money coming out of stablecoins. And then it's also the fear trade because we see all the money going into Bitcoin, not trash altcoins. So very, very important. Now we're at resistance though. One of two things happens. We break out of this range, we retest the 200s, and perhaps see the first time ever when Bitcoin starts legitimately taking back market cap compared to altcoins. Very, very interesting here that we had a peak in Bitcoin dominance, or trough, I should say, in 2018, and now we're holding above those levels. If and when we do break out, this is a low. That's a higher low. That's cryptocurrency dying relative to Bitcoin. Bitcoin taking back market cap, slaying altcoins one after another, just chopping their heads off like the trash scam Ponzi schemes they are. Or they're like really good and changing the world, but probably not. Let's be real. Bitcoin, he'll spare those ones, or she, or they, or whatever you're supposed to say now. So anyway, so for our golden warrior, Bitcoin strong but at resistance, probably sells back off here, gives back a lot of this move, which means altcoins are probably getting ready to rip, or we're getting ready to have a aggressive pullback. That being said, Bitcoin dominance, less stable coins. We see again that consolidation, and we were calling for that breakout, and we got the big thick green candle in all the doubters' faces. A nice little like 30 to 50% rally straight into our pockets. Can't be mad about that. But what is this really telling us? It's telling us that when we take the stable coins out of the picture, that Bitcoin is crushing altcoins. But we didn't really need the chart right this second to know that, because we know obviously when money comes out of stable coins into cryptos, either Bitcoin or shitcoins, we know that that is risk on when it comes out of stable coins. People want to speculate. And then we know when the money goes into Bitcoin instead of the altcoins, in this case anyway, we know it's fear of inflation. We know it's fear of banking. We know it's fear of government. We know it's fear of the Tooth Fairy, or I don't know. That was a horror movie. I was trying to think of something scary. Freddy Krueger, fear, whatever, but it's fear. There's a fear trade. So everyone is ready to speculate, but they're also very afraid. So they're really willing to take risk, but they're scared. Very, very interesting combination right there. Typically, the best way for people to lose their money is to be afraid and risk on. But, what do I know? I'm sure everything we're just going to the moon on everything now. So maybe this is going to go back as, us being like, oh, we bought the absolute bottom, the retest of the 200 simple. dollar bills, mad gains, new bull run, crypto exploding, tech exploding, inflation, who cares? We're crushing it. Or maybe this is going to go down in history as the biggest fake out ever before a complete meltdown. For me, it's 50-50, coin toss. Honestly, I would rather bull market because I don't want to call myself names or anything, but let's be real, okay? If you have the choice between doing like a ton of work and hard stuff and taking chances and doing all kinds of like research and charting nonstop, and then after all that, you can like make some money or at least hopefully not lose all your money. Like, I guess that's okay. But like, call me lazy, but I would rather just sit back and just watch Bitcoin go up 5 or 10% every day. Altcoins just go parabolic. Stocks just to the moon. Like, sure, maybe I'm a little selfish, but less is more. And I want to do less work and make more money. So my vote is bull market, but it really is coin toss right now. So Matic, whatever this thing is, never even looked into it. I have no idea why everyone loves this so much, but it is an absolute pleasure to trade. It's a complete gem. This thing is beautiful. It trades very technically. It is very bullish relative to the rest of the cryptos. Above the 200 exponential and simple. Got a beautiful back test, a touch, everything angled to the upside. We are very close to losing at 821. Again, I'm looking to buy the dip on this thing if we come back down to that dollar range, though. If we do rally back up from here across the 821 back to the upside, I'm going to go back risk on this. We did take some of the profits from our big trade up here, and then we entered back in right here. This could be... Man, we had a nice rally in this because we basically got in at, I think it was 98 cents. So we have a nice like 20-something% gains or whatever right here. So don't want to just give it back. We'll see on this one. I like how the chart still looks for now, but it's very close to having me a little less bullish because I will respect this. If this flips green, obviously I'm probably going to do an ad and look for that higher upside target that we had mapped out here. But for right now, I'm looking to re-enter at a lower price to get further upside. We'll see. I think the 786 is still in play right here. And this is just consistently putting in higher lows and is just substantially more bullish than most cryptos right now, including Bitcoin, including like 99% of altcoins. BNB, one of my personal favorites. You guys see, I don't know how anyone uses Binance US. This is the BNB. Wait, is this? Oh, this isn't Binance US, is it? BNB USD. I feel like it would say. Damn, I can't think right now. I feel like this is the regular BNB chart, or it would say BNB USD. Or it would say, what was it? Binance US is what it would say, I think. So I'm pretty sure this is the regular Binance chart, but these scamlicks are insane on this thing. Crazy one right here, 20%, crazy one right here. Like, I don't understand how, regardless of which Binance exchange this is, I don't understand how their native token has this much, like volatility or this thin of order books. This is insane. 20+% moves, that get completely bought back up. This to me, you could call it a fat finger or whatever. That looks like an exchange, quote unquote, manipulating or like squeezing the price. That's what it looks like to me. So, maybe it's completely organic, but just over and over again like this, there's no excuse, and it's upside and downside. So it's not like there's just no sellers or no buyers. Like, it's both directions. Very, very strange. But we did take out that high. You guys know, obviously, I'm not a big fan of Binance, but realistically, the upside target is the back test of 360. And then after that, it's basically the top of the channel here. So this still looks very strong, picking up momentum. Binance, definitely one of the better cryptos to hold right now. Actually serves a utility, serves a purpose. So, I get it. I can understand why people like it. Okay, so gold. So gold did our thing. All right, so we closed that same little breakout technical top right here. I love how technical this whole thing is. And of course we have this blast out the top. So you're like, oh, you drew it wrong. It should be up here. And then it should be angled differently from that. No, it's drawn right. This is right. This is how you draw it. Okay. You can draw it however you want. This is how I draw it. And for me, how I draw it, we broke out technically here. But we have to be very careful because we also did it right here. And then we had a very, very aggressive sell-off, a fake breakout. This is a breakout fear trade again. So let's look out for this, that it doesn't just come all the way back down, do exactly what I said, put in bearish divergence, double top, fake breakout, and then just melt all the way back down to the heart line or the bottom of the channel. I mean, this is it. This is exactly my point about crypto too. Go anywhere on the internet, talk to anybody, mention crypto. Anybody that's into crypto or gold or whatever right now is like on top of their like high horse. You know, this is it. We're going to 1 million. Gold's going to 3,000. By the time the people buy it, the institutions and the FOMO and Bitcoin's the new reserve currency. You're dumb if you don't know XRP. Wait, what? Who even said that? Stricken XRP from the record. Pretend I didn't say that. But regardless, you know, this is it. So we'll see what happens. This next, you know, couple days, week, whatever, is going to be enlightening. Silver, obviously just a worse version of gold in every way, shape, or form. Poor silver guys, man. I feel so bad for them. Caterpillar. So we got the breakdown. We retested the 200 simple. Now we got to be real careful because this is it. This is the last line of support before the air pocket. And to tell you the truth, are we getting greedy on this, trying to get it under 200? Or at that point in time, is it no longer look as bullish? There's two ways to look at this right here. You're either buying support right now, expecting this a retest, and we're going to move back up, and this holds. Or when we break down here, you're buying, you know, the gap fill, basically the air pocket. But the truth is, if we lose this support, the chart looks a lot less bullish if it comes back down here to this level. So I think the real trade is to wait and see how this works. And then if we get back above 226, I'm interested for continuation. If we break down here, I'm looking to buy 198 for the minimum back test of the 200s, hopefully to continue to the upside. So Deere, very, very similar here, retesting the 200 simple. So we did get the 382 retrace here. So I would expect this to act as support for now. If we break down further, the 0.5 seems likely at 356. If we continue back to the upside, I would expect a retest of 402. So probably not a great trade setup on this right now, unless you're basically betting on new all-time highs. UNH, still looking like trash. Very, very big Dow stock right here. One of the biggest for all the healthcare people out there. Confirmed officially into a bearish downtrend. Multiple retests. Consistent lower lows. At some key support for right now. Probably do see some kind of like little bounce right here. But if we can't get back above the 618, above the 200s, everything, I mean, we're coming down here. We're going to 431. Let's be real. GSG broke down from the key support, consolidated a bit, left a little gap right here. It's sort of like in no man's land. There's nothing really here on the daily. So 18 seems more likely. But if we flip out to the weekly, basically that measure move is going to put us right where we want to be. So yeah, it looks like both of them are pointing. I mean, 18 looks obvious. You know, in hindsight, obviously, we saw this way in advance, this descending triangle. It was very clear. But now everybody sees it. That's the beauty too, is we always see everything way before the rest of the market does. So we're always positioned in advance. So LNG is next. Cheniere Energy. We'll have to see what happens with this one. It got a little muddy in here for a bit and actually started looking pretty decent. And then we broke back down again. So it looks like maybe I was right and there was just a little squeeze in the meantime. Those damn fundamentals. Shell had that aggressive breakdown. So this is what we were talking about. Very, very similar to like what gold did, where we break out the top of this long-term, you know, trading range. And in this case, it looks like we're breaking out the top of this thing, ready to just rip, and then boom, rolls over, melts down, part of that energy trade. But again, you know, I'm looking to swoop on this stuff when the opportunity presents itself. I'm still seeing something like this, like ascending support-wise, where I don't want to quite, you know, call this thing it's going to melt down, but I would look at something like that holding, since we're kind of losing the 200s, but it's happened a bunch. There's not a real consistent way of doing this, because the 200s have been a little sketchy. So MOS is next, Mosaic. So again, exactly what we said, just turned into this fake out descending triangle, turns into this descending triangle, and again, we're back down at the bottom of the range. We do this enough times, we're going to break through it. And that's when, you know, Papa Fertilizer gets that $33 holla. So get ready. ACB, cannabis stocks. This thing did nothing. Tilray had a nice bounce right here. Congratulations to some of the group members buying that dirty, dirty Tilray new low. Congratulations on being the only winner Everyone that's ever bought Tilray is a loser, except for there's like a couple people in the group that are the only winners ever. And I say that because this is the lowest low Tilray ever put in. And I know for a fact group members bought this dip right here. So you're the only people ever in profit on Tilray. So congratulations. Maybe there's some random person out there as well. Possibly some people, you know, obviously involved before it went public. But other than that, it's literally just there's a handful of group members. So congratulations on being the only people on planet Earth that have ever bought Tilray and are in profit currently. How long will that last for? I wouldn't get greedy with it. But you may have just bought the actual macro low of the worst sector of the stock market in existence, in which case this is going to age really nicely for you because you're talking about like 20,000% gains if we go to new all-time highs. But, I mean, they're $2 for a reason. URA. So we talked about the uranium stocks, basically exactly what we said happened. We're consolidating above the white support, consolidating below the red resistance. The red resistance goes way back here. The white support goes only back here. So we broke down. We're threatening those lows 1 time, 2 times, 3 times, 4 times, 5 times, 6 times down here. How many times before this just turns into a very, very clear descending triangle? That, to me, that's all I see right now. I just see a dirty, dirty descending triangle. Something along these lines. You could say it's a little more like that, and it's just messy around the bottom. A couple different uranium stocks look kind of different. But this, to me, I mean, it looks like a bearish distribution pattern, and then we're getting ready to have the next big leg down to like $14. And I know the uranium and the nuclear plants and the, I get it. But not according to the chart. The chart says you're too soon. Or you're too late, because we were in it back here, out of it up here. In my opinion, not the time to be in uranium. This is the worst time. I mean, sure, maybe we buy support right here and we push back up. But, I mean, we know if we jump enough times on the ice, we're going to break through. So maybe there's another 16% upside on a little buy the dip right here. But the truth is, the tighter we get squeezed into this pattern, and we know it favors the downside, I don't want to just take a 20% haircut trying to get greedy. So Neo, trash, new lows, garbage, $8, called it, lucky guess. I mean, that's it, right? So like we hit our target, we put it there way in advance, took us a little longer to get there. We're there now. So this is it. We're either buying the 618 and this thing's ready to rip, and that was the whole retrace and we're done, or we're going substantially lower. So it's either $4.46 or this thing's ready to rip. And everybody was wrong about the China narrative reopening play, as we predicted. God damn, we haven't been getting lucky this year. What, I mean, is it really March and we've gotten lucky on pretty much everything so far? That's insane. God, that's how you know we have a nice group of people in our little community. It's little, but it's tight like a tiger. It's a bunch of predators is what it is. Crypto sharks. Baba. So this is it. This is basically what we're talking about. You know, give or take a couple dollars right here. This is what we're looking for. If you want to get bullish on China, go ahead, do it right here. Invert head and shoulders. Obviously, you'll end up living in a van down by the river if you're wrong, but that's a choice that you have to make on your own. Yeah, so 40% back to the neckline for the retest. And if we get the breakout, measure move to the upside or back test at 618, we're talking about 92%. If we lose this previous low right here, we're probably retesting the lows right here. So maybe you get taken out of the trade right here, and then you take another stab down here for a higher low or somewhere around that level. And then if that doesn't work out, you got to call it. We did re-lose the 200 exponential and simple. So bear market, attempted the bull market, failed. I don't want to write it off just yet because it's not crazy to overshoot to the upside, overshoot to the downside, and then still end up going into a bull market. So we don't want to get overly bearish just yet. There's definitely some potential risk reward trades here. It doesn't have to be BABA. We can watch a couple of these other China stocks as well because there is some potential there. How are we doing on time? Oh my gosh. We're getting good at this, guys. 59 minutes and 42 seconds. What do you want to do for the last 18 seconds of the stream? I mean, I've got a couple things, but I'll let you guys chime in. There is a 10-second delay, though. So whatever you say, we have 8 seconds to do it. But no, seriously, that was definitely a good stream. Knocked out a lot of information. We're so freaking close to so much stuff going on here. I mean, everything is literally about to decide, are we going into a macro bull market or a macro bear market, or, continuing the bull or continuing the bear, etc. So we are very, very close to some long-term trends. We're very, very close to trading our kind of like, quick little scalp slash like kind of swing trade. We're close to kind of pushing that to the back burner and then becoming like the, trend trader investors again. So for the last, like, I mean, almost, well, damn, depending on the asset, some of these things, it's been almost 2 years now where we have been just, I mean, full on like putting on our war paint, riding in on horses, just scalping everything we can. And we're at that point in time where, you know what, it might be time for the old scalpers to relax a little bit, and we can do a little more swinging, have a little fun, and then after that we can be investors. We'll be investors, guys. We're investing in cryptocurrency. Hooray! But I mean, that's the truth. That's what it's all about. It's all about calling it out. When things look bearish, we got to call them bearish. Got to say they're ugly, they're mean, they're garbage. But even cryptos, as much trash as they are, and it's like absolutely horrible the crypto bro community is, and just how terrible I imagine the internet of crypto people is. It is what it is. I mean, even the Peter Schiffs of the world get their time to shine. So this could be it. It could be the spark that ignites the next Bitcoin / crypto trash bull run. Is it going to be? Are we going back into risk on? Did the Fed really pivot? We don't know about that stuff. Or is the stock market going to crash while crypto soars and gold soars and everybody's afraid? And, it's all about like lead and copper and gold and canned food. I don't know. I'm not really seeing Mad Max scenario. I think that probably the people in charge have like a vested interest in not having that. But then again, I mean, whatever. Paris on fire, sure. I don't know. I don't think it's the end of the world, guys. I don't think we're going into depression. And I think that there's potential that we could have, this quote unquote rolling recession, quote unquote soft landing, quote unquote higher for longer, quote unquote sustained inflation. Like, I think that there's a good possibility all that happens. Like, maybe we do get higher rates, lots of inflation for years to come, and everything just goes ripping into the next melt up. I mean, that's literally what's been happening for like, depending on how you're looking at it, 10, 20, 100 years. So why should this be different? Like, it's really easy to say like, oh, this is the end of the world. This is going to be it. World War III. Can't go higher any longer. The Fed's going to break something. We can't just keep printing all this money. But you know how long they've been saying that? It's the same narrative they've been saying for like, I mean, they were saying it back in the 1920s. It's 100 years. 100 years ago, people were saying the same thing that people are saying now. So they were wrong back then. Are they going to be wrong this time? I don't know. Maybe it'll be different this time. Maybe it's different. This feels different. All right, so we'll call it there. Appreciate you showing up today. Digital Durwood, Hex Evolved in the house, Jay Hoff. Good to see you guys. Hopefully everybody enjoyed the stream. We will see you for sure on our Wednesday midweek market update. I will see the group members each and every day in between because we're always having some fun, talking shop, playing around with some new indicators, all kinds of fun stuff. So yeah, we'll call it there. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. It is March 19, 2023 at 9:05 p.m. Eastern Standard Time. I'm, of course, Crypto Trend Trader, and I am getting the F out of here. Everybody have a great night. Appreciate y'all tuning in, and I'll catch you on the flip side.